Again, good evening and welcome to tonight's free market update for tomorrow, Wednesdays. What is tomorrow? 13th? July 13th trade. So, as we head into the expiration at the end of this week, we are, of course, wondering, does this ever stop? Does it ever pull back? I mean, this has been bid from about a 1980 low into a current 2150, which, by the way, we were kind of looking for this area in last night's video, 2145.50 area. And, we look at these Tuesdays trade and we kind of wonder, are we going to get a counter trend type of a trade on a Tuesday? So today's question would be, I think anyway, would be today's counter trend trade type of a Tuesday trade, was it a bust or a clue? And let's look. Let's see, because the ES, as you can see, did nothing but just trade higher, right? I mean, let's see. You got open down here at 21.30, high 49.25, and close up at 46. Clearly higher than the open, darn near the high, etc. Right? But one thing that I noticed today, and I want you to kind of just know about this and look at it and see, was what about the NASDAQ? Did the NASDAQ play along today? And the answer is no, it really didn't. It doesn't look bad, does not look bad, but it's certainly not as bullish as the S&P was today, and it really did not keep up on a relative strength type performance. What I mean is it was up 0.46% today. The Dow was up 0.6667. The Russell led the way up 1.16%, and the S&Ps were up 0.7475%. But again, the NASDAQ was up 0.49. That in and of itself is not such a big deal, but I do not like it when the NASDAQ lags like that when you're looking for a bid, continuation, etc. Notice also, if you will, too, please, the extent to which we've kind of gotten away from the averages down here. That's a bit concerning. I'm not bearish. I'm not bearish. Okay, follow me. I'm not bearish, but I do have some things that are on my mind here. The extent to which we pulled back in the treasuries. I went into this in the premium video last night, not so much this free video, but what we were looking for and the observation was the fact that we got the pullback into the 8 period, but yet unable to make a new high here when and where the 30-year did. As you can see here, let me stretch it out a little bit for you so you can kind of see what I'm pointing to. And that is that we've got the same retracement, but then as you can see clearly, we made a new high here in the treasuries, but did not in the notes, not in the 10-year. Okay, so up here we looked at the notes last night as being bearish, and the whole treasuries interest rate sector, I guess, if you will, being bearish, and they pulled back kind of pretty healthy today. But they pulled back a lot. I mean, that move is not, something that can be sustained on a continual basis. I mean, that was a big move. It pulled back 2 full points in the bonds there, which is something that kind of, quote, needs to rest, I guess, if you will. Another thing here, let's go keep looking. The yen. Okay, this is on Japanese elections. You got Abe and Kuroda going to be able to keep with the previously planned QE, 20 trillion yen, I guess. It's about 200 billion in US equivalent. And so with that, they're going to be pumping the yen. So you see the yen pulls back, right? But, is that really sustainable, that type of a move? No, it's 2 full standard deviations away from its current mean average up here at about 98 or so, something like that. So a retracement down here back into, I don't know, at least 97.5 or so, something like that, would make sense off of a 2 full standard deviation move. So if you get the yen pullback, well then that almost always, certainly more times than not, equates to an inverse move in the stocks. So am I bearish? No, I'm not bearish. I'm not at all. Okay, how can you be bearish this market? I mean, certainly you've got, well, I'm going to go to it in the premium video, with all the different things, but you can't be bearish, okay? I mean, this is, look at the limit down move last August in 2015, in the August, sell-off, and then this Brexit, break and the recovery, I mean, they all the pullbacks, all the retracements are met by monster bids that come back, and we make new all-time highs, and then we retrace, and then new all-time highs again, then we retrace, and new all-time highs again. Here we are, and then we'll retrace again. Of course, we're going to retrace a little bit, but the question is when. Well, I'm not bearish, but I am looking for and trying to help you identify pullback opportunities to buy back into on a retracement. And so I would look for a buying opportunity on a little retracement tomorrow. And I'm trying to make the case for it in showing you the NASDAQ divergence and showing you the extent of the move down in the yen, which I think needs to retrace, the extent of the move down in the treasuries, which I think needs to retrace. Also, there were a few other things, but like the euro, go look at the euro. That's certainly not a bullish chart. Not the bid that came into the euro that then was not able to be sustained and or held. And so with that, just looking for a little pullback opportunity, maybe tomorrow possibly and or Thursday, and then we'll talk about when we'll look to make new all-time highs yet again. But for now, I hope this helps. You guys have a good trade. Nice evening. This was the free video for tomorrow, Wednesday the 13th, and this is Neil tonight with the videos. So I'll be with you again, I believe, tomorrow. Until then, take care. Good trading.